You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Tuesday, 10th day of September, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast, that one's private. It's members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, there's a link. 5-day free trial, no credit card required. Just hit that purple button, fill out the registration form, hit submit. We'll get your desktop set up today, get your indicators indicating today, and then your trial will officially start tomorrow, Wednesday. No, that doesn't mean you'll get cheated out of 2 days, because you'll get Monday and Tuesday of next week. Plus, you'll have access to the indicators over the weekend, and there are markets that trade over the weekend. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says noon broadcast. Click the link. Fill out the 30-second registration form, and you're done. What happens going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to catch up later. You can do both of those via our YouTube channel. And it's easy to remember, youtube.com/CFRN. You already know the YouTube part, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random, watch a little bit, jump to another day, watch a little bit, You get the idea. You can see with your own eyes how we've evolved over the years from where we began to where we are now. youtube.com/CFRN. While you're there, be sure to hit the subscribe button, the little bell, the thumbs up, all that good stuff. That helps with the algorithm, helps more people find our channel, and it shows us how much you really love us. So thank you very much. Okay, our daily schedule for the afternoon broadcast, our devotional, word of prayer, some news, recap of the alerts. About 50 minutes into the broadcast, Michael will join us and give us a recap of what happened this morning in the live training room. Then, from 1 to 1:30, we'll go live on the TradingView platform, do some live trading, and then we'll wrap things up with our good word for the day. So our topic for the devotion last week, this week, and even next week: God's dream for your life. Wow, that's a big devotion. Yeah, well, it's pretty important. God's dream for your life. It's kind of why you're here. Our scripture today, Psalm 37, verses 7 through 9, and I'll be sharing that from the Message translation. Starting in verse 7, quiet down before God. Be prayerful before Him. Don't bother with those who climb the ladder, who elbow their way to the top. Bridle your anger. Trash your wrath. Cool your pipes. It only makes things worse. Before long, the crooks will be bankrupt. God investors soon own the store. Now, yesterday, we discussed the fact that God's dream for your life is sometimes delayed. We talked about the different reasons. If you missed it, you can always catch it by going to our YouTube channel, youtube.com/CFRN. Today, I want to talk about, in a delay, you can trust God's timing. When you actively pursue God's dream for your life, you're going to run into delays. God uses those waiting periods to prepare you and test you so that you can face whatever is coming in the next phase of your faith. Most of us tend to worry when we are delayed. We get stressed out. We complain. We become uptight. The Israelites, when God delayed their journey from Egypt to the Promised Land, reacted the same way. In Numbers 21:4, we read, on the way the people lost their patience and spoke against God and Moses. They complained. The Israelites' complaining and fretting were the very sins that kept them out of the Promised Land for 40 years. No matter what God did for them, they found something to gripe about. They had no water, so God provided water. They had no food, but when God provided food, they complained about the food they got. It's easy to gripe when we're forced to wait, isn't it? We don't mind waiting if we can complain about it while we're waiting. Proverbs 19:2 says, impatience will get you into trouble. It's frustrating to be in a hurry, and God isn't. God is never in a hurry. The Bible says, a day is like 1,000 years, and 1,000 years like a day to God. He's larger than time. One of the most useless things to try to do is to speed up God. When we try to take matters into our own hands and help God out, get in trouble. Now, most of you in this audience are at an age where you're starting to realize that something your parents told you when you were very young is actually true. It made no sense when you were a child, but now you understand it. The older you get, the faster time passes. Am I right? You're still in your mid-30s, early 40s. Maybe you haven't hit that point yet. But once you cross 50, you got to duck, so the furniture doesn't hit you because time is flying by so fast. I used to argue with my mother. Mom, come on, get real. There's 24 hours in a day, 7 days in a week, period, end of time. Well, time itself doesn't change, but it's the perception of time. And that has to do with our time horizon. In other words, how long we've been alive and cognizant. As a 6-year-old in first grade, when you got that first summer vacation, 3 months, man, that seemed like an eternity. Because all you had to compare it to were probably the 3 years that you've been cognizant. That usually happens around 3 years old. And so we're talking about 10% of your lifespan, or the part you can remember anyway. So that's huge. But now, in your 50s and in your 60s, 3 months go by like 3 hours when you were a child. So think about God. No beginning and no end. Always has been. So for you and I to wait on our dream for a week, a month, a year, a decade, 40 years, okay? Seems like a mighty long time to us. But from God's perspective, it's literally nothing. Because his time perception has no beginning and no end. When you get a dream from God and make the decision to go for it, but then are forced into God's waiting room, you start trying to figure out ways of doing God's dream on your own. But the Bible tells us to trust God's timing. Psalm 37, rest in the Lord. Wait patiently for him to act. Don't fret and worry. It only leads to harm. Resting can be an act of faith. It means you're waiting on God. When Jesus and the disciples were in a boat that was caught in a big storm, Jesus just kept sleeping through all the ruckus, while the disciples pretty much freaked out. When they woke up, or woke him up, to ask, why are you sleeping? He responded, do you think God is going to let the boat sink with me in it? By sleeping through the storm, Jesus was saying that we can trust God even in the middle of a storm. When we get into a storm, we tend to lay awake all night, fret about it. That means we're not living by faith. We can't get any sleep because we don't really trust God to work it out, whatever it is. But God says, don't fret. Remember, I'm always with you. Trust my timing. Worry only makes you miserable. So stop worrying and start trusting that God will work in you and through you while you're in a delay on the way to your dream. And the dream I speak of is God's dream for your life. Join me in a word of prayer. Heavenly Father, we come before you seeking to rest in your presence, as your word in Psalm 37 reminds us to be still and wait patiently for you. Help us to not be anxious or troubled by the success of those who do wrong, but to trust in your timing and justice. Teach us to refrain from anger and turn away from wrath, knowing that those who hope in you will inherit the land. Strengthen our hearts as we wait for your promises to unfold in our lives, trusting in your goodness and faithfulness every day. It's in Jesus' name, believe and pray. And everybody said, amen. Amen. And happy Tuesday. Let's take a look at the numbers from around the world. We'll start here in the U.S. The cash markets, or the indices, as they're called. Another color today, but they're all the same color. The Dow is currently down 392 points, 1%. NASDAQ is down 59. S&P 500 is down 23. And the Russell 2000, our man in the street, down 20 points, or basically 1%. In the commodity basket, crude oil down $2.99, trading 65.72 last. That's a drop of almost 4.5%. I have a news article for you that talks about the reason behind that. Gold is up $8, trading 25.40.70 last. Silver down a dime, trading 28.53 last. In the Asian markets at the close, the Nikkei dropped 56 points. The Shanghai rose 7. The Hang Seng gained 37. And in the European markets at the close, FTSE down 64. The DAX down 177, 1%. The CAC down 17. So we had a mixed day in Asia. It was a red day for the UK. And it is a big red Radio Tuesday here in the US of A. Or as some might call it, Turnaround Tuesday. It's one of those urban myths you might subscribe to. All right, let's take a look at some news from around the world. Okay, the federal criminal trial over the death of Tyree Nichols began yesterday in Memphis, Tennessee. 3 former police officers face charges of violating Nichols' civil rights through excessive use of force. 2 others have pleaded guilty, but 3 have decided to take it to trial. The incident dates back to January 7th of 2023, when 5 black police officers pulled over 29-year-old Nichols, also a black man, on suspicion of reckless driving. Video footage shows the officers pulling Nichols out of the car, after which Nichols fled the scene and was ultimately apprehended again. The officers punched, kicked, and beat Nichols with the baton until he collapsed. Nichols was taken to a hospital roughly 30 minutes later and died from his injuries. If convicted, the officers faced the possibility of life in prison or even the death penalty. Nichols' death sparked protest and debate around police tactics and reform. Following the release of video footage, the 40-member unit the officers were part of, a task force to patrol high-crime areas, was disbanded. What a horrible tragedy. Now, I watched a movie over the weekend. I cannot remember the name of it. Oh, I do. Rebel Ridge. Yeah. If you got Netflix, watch Rebel Ridge. The point I want to make is when the police pull you over, it doesn't matter what reason, and it doesn't matter what color you are or what color they are. Comply. Put your hands in clear view on the steering wheel. Yes, sir. No, sir. Okay, sir. Yes, I'll step out of my car, sir. Just comply, okay? Because the second they activate their lights to pull you over, that automatically turns on their dashboard cam. Now, I learned that from the movie Rebel Ridge. And I don't want to say too much about what happens when this gentleman gets pulled over. Actually, he was riding a bicycle, but that's as far as I'll go. It's worth watching. Okay. And a sad note here, James Earl Jones, the iconic actor known for voicing Darth Vader in the Star Wars franchise and Mufasa in 1994's The Lion King, died yesterday. He was at his home in Pawling, New York. So far, the cause of his death has not been disclosed. He was 93. Jones' career spanned over 70 years on the screen and stage, earning him Emmy, Grammy, Oscar, and Tony Awards. Known as an EGOT, E-G-O-T. That's when you got the whole bunch. Only 26 other entertainers in history have achieved that feat. Born in Mississippi in 1931, Jones was raised by his grandparents and overcame a childhood stutter. Now, probably everybody on planet Earth knows the voice of James Earl Jones, but he overcame a childhood stutter. And this was back in a time when if you had a stutter or some other kind of problem, you didn't immediately get proper attention. Again, he grew up in the deep South, Mississippi. You were probably just sent out to the fields to pick cotton, but he overcame it. After graduating from college, which is an amazing thing that he even went to college, considering he was born in Mississippi in 1931. He went on to serve 2 years in the Korean War. He made his Broadway debut in 1958 and his movie debut in 1964's Dr. Strangelove. Jones starred in over 80 films, including as King Jaffe Joffer in the 1988 comedy Coming to America and its 2021 sequel, and as Arthur Terrence Mann in the 1989 sports fantasy Field of Dreams. Wow, what an incredible life he lived. And truly he will be missed. Apple has revealed its new product lineup at the company's It's Glow Time event. That's the name of it. Yesterday, showcasing its new iPhone 16 series. Now, we don't need an iPhone 16 because your iPhone 15 no longer works. We need an iPhone 16 so that Apple can keep making money. But you already do that, right? Now, there are reasons, I suppose, for some to get the new phone. The new models integrate its previously announced Apple Intelligence AI software and a new A18 chip up to 30% faster than the iPhone 15 model. Now, question. Have you ever suffered from sluggish performance from your Apple 15 chip? Probably not. What I really caution you about is this AI software that is embedded in this phone. I mean, you're literally signing a document that says, I give up all rights to privacy forever. Period. So, as much as you want to get your hands on that phone, give it some thought. Other highlights from the event include the introduction of a new capture button across all new iPhone models for quick photo and video capture. The Apple Watch 10 is reportedly 10% thinner than previous models with improved battery life. Apple also announced 2 new AirPod models, including a premium version with active noise cancellation and a hearing aid feature pending FDA approval. What's the chance they won't get it? Slim to none. The news come as Apple's Chinese rival, Huawei, is set to unveil today its trifold smartphone, the Mate XT, following a pre-order campaign that saw over 3 million sales. Apple's market share in China has been declining in recent quarters, and it is no longer a top 5 smartphone vendor in the country as of July. That country being China. They stole all the good stuff and made it their own. Well, the Fed's doing a little backpedaling. Federal Reserve unveiled plans that would massively scale back a proposal to raise capital requirements for banks after politicians and the banking industry pushed back on the initial plan, warning it could restrict lending and hurt the economy. You've all heard the saying, hi, we're from the government and we're here to help you, right? The new proposal would increase capital levels for big banks like JP Morgan Chase and Bank of America by 9% in aggregate, down by half from the original plan from more than a year ago, which set the capital increase to around 19% for those institutions. Banks with assets between $100 billion and $250 billion, which were initially subject to the stricter standards of the largest banks, would also no longer be subject to the increases, other than the requirement to recognize unrealized gains and losses of their securities portfolios in regulatory capital. This is a major reversal following the string of regional bank failures last year that was touched off by Silicon Valley Bank. Capital has costs too, according to Fed Vice Chair Michael Barr last night at an event in Washington hosted by the Brookings Institution. As compared to debt, capital is a more expensive source of funding to the bank. Thus, higher capital requirements can raise the cost of funding to a bank, and the bank can pass higher costs on to households, businesses, and clients engaged in a range of financial activities. So, wonder what the banks will do with all this capital they were just handed by the Fed. Well, to get big tech stocks powering higher again, it will take the convergence of two factors, according to Goldman Sachs. The magic formula is a steady dose of interest rate cuts from the Federal Reserve, combined with a burst of innovation that jumpstarts earnings growth in excess of 20%. We have to get the industry back from an 11% growth rate to 20 to 30%. And to do that, new innovation has to happen. Now, that statement was from Cash Rangan, a veteran tech analyst at Goldman Sachs. You should sometime take a look when you have time at how many unprofitable trading days Goldman Sachs as a whole has had in the last decade. Well, it's not hard to win the game when you own the game, right? Like all these people that play poker online. Do they not think that the quote-unquote dealer or the house knows what their hold card is, or all their cards, or what card they're going to get next? I'm stunned that people play those online games. I mean, it's one thing in a casino where you already know the house, has the edge. That's how they build all those pretty tall buildings. But online, you're dealing with some offshore business, and I'm sure you've heard the horror stories of somebody who actually won because somebody somewhere fat-fingered a trade, and they actually won money and then tried to collect it. Anyway, according to Rangan, we have to get the industry back from an 11% growth rate to 20 to 30%, and to do that, new innovation has to happen. He's a bull on Microsoft and Salesforce, and says the tech sector must deliver on the AI front in areas like upselling customers and monetization. When you compound that innovation with lower rates, magic happens. I can't believe he even said that out loud. Well, if you're wondering about crude, like I think I said earlier, it's down like 4.25%, 4.5% on the day. Oil resumed its downward trend today, tanking more than 3%, now more than 4%, after oil alliance OPEC lowered its demand growth forecast in 2024 and 2025. Tuesday, West Texas Intermediate slid more than 3% to hover near 66 per barrel, while Brent also fell to trade below 70 per barrel, its lowest level since December of 2021. How low can it go? It can go pretty low. We've seen it go to $20 on this radio program. Apple has lost its court fight over a 13 billion euro Irish tax bill. And Google lost its challenge over a 2.4 billion euro fine for abusing its market power, in a double boost to the European Union's crackdown on big tech. Wow. The EU is going to take every tech company it can to the cleaners. For those of you that enjoy OpenAI, according to Reuters, OpenAI plans to release Strawberry. It's reasoning-focused artificial intelligence as part of its ChatGPT service in the next 2 weeks. Sam Altman-led OpenAI has propelled new interest and triggered heavy investments in AI as businesses race to capitalize on the lucrative technology to boost their products. The Microsoft-backed AI company said last week it has more than 1 million paying users across its business products, helped by strong adoption of its chatbot owing to its advanced large language model. Strawberry is different from other conversational AI because of its ability to think, and I'm using air quotes here, to think before responding, rather than immediately answering a query. Reuters had exclusively reported in July that ChatGPT maker OpenAI was working on a novel approach to its AI models in a project codenamed Strawberry. Well, they got that right because here it is. According to the information report, while Strawberry is a part of ChatGPT, it is a standalone offering, but it's unclear exactly how it will be offered. The initial version of Strawberry will only be able to take in and produce text and not images, which means it's not yet multimodal. Microsoft and OpenAI failed to respond to Reuters' request for comment. And last, are you wealthy? Oh, you should be smiling. Amundi SA and First Eagle Investments are looking to raise as much as $5 billion for a new private credit strategy that will offer wealthy individuals in Europe, the Middle East, and Asia access to private loans made to mid-size U.S. companies. The fund will use a perpetual evergreen structure to draw high net worth individuals who might otherwise face barriers getting into the $1.7 trillion private credit market. It will also be open to other kinds of investors, including institutions, family offices, and asset managers. At this point, it was unclear how many leg breakers they will be hiring on. And while this is an economic program or a market program and not a political program, you better believe that that debate that's going to happen tonight, they keep flashing 9 p.m. Eastern on the screen, but the voiceover says 8 p.m. Eastern. So figure it out. I think it's actually 9 p.m. Eastern. But so much in our economy today, tonight, volatility in the markets, and the next 4, possibly 8, possibly 12 years, depending upon how things play out. A lot hinges on the debate tonight. So expect some volatility as it gets underway. Might want to put the mouse down for an hour, let it play out, and then as the market resumes its normal rhythm, we'll be heading into the London Open. You'll see their response, and then tomorrow morning at 9:30 a.m. Eastern, that's when you'll see the big response, because institutional traders will have more than just the debate itself to base their decisions on, but how the public, and more important, the media, is reporting who won the debate. I can hardly wait. How about you? Okay, let's do this. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Over the last 319 weeks, we've issued over 17,700 individual handcrafted alerts. In fact, I think 2 or 3 more alerts is going to put us at 17,800. So, over the last 319 weeks and almost 17,800 individual alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. This recap was done this morning at 6:30 a.m. Eastern. So a lot of things have changed since then, and there have been additional alerts since then. Valerie will update the recap this afternoon about 5 p.m. Eastern, as she does each day. But at the time of the recap this morning, since the market opened Sunday night, we had issued a total of 18 alerts. We were still waiting on the outcome of 8. That gave us 10 actionable alerts, of which 2 or 20% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders. Yesterday we were sitting at 25%, along comes Tuesday, now we're at that 20% weekly average. 2 weeks ago I think we closed slightly above 20% at like 26% for the week, but we've also had weeks at 0% and 3% and 5%, so the average still remains at 20% or less on a weekly basis. Now, the logic alerts are not designed for you to just trade them instead of learning how to trade. They're a tool designed to help you learn how to trade. Before you can learn how to trade, you've got to learn how to read a chart. And that's exactly what the logic alerts do. They help you learn to read a chart. Every logic alert has an entry price, an initial target, additional targets, and a final trade to target. When you take those alerts and put them on a 30-minute chart and start drawing horizontal lines, you'll be amazed how the clouds part. And you can see what the market's trying to tell you. Now, 319 weeks is a long time, but twice as long, however long that is. We rolled out our concierge trade alerts. They're a little bit different. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. So a logic alert can come out at 2 a.m. or 2 p.m. But the CTAs are published as a static report shortly after the Globex open each evening. Last night, it says 6 o'clock, but it was actually 6:02. This is Pacific time because I'm on Pacific time, and that's how Telegram works. It reads the clock on your computer, so whatever time zone you're in, that's the time you're going to see there. Okay? So, if you're a member or trial member, you can read all of these instructions up here. But the point I want to make is every one of our members and trial members had every one of these targets last night, actually 2 minutes after the market opened. So let's go look at the daily chart of the S&P. There it is. Okay, that inside day yesterday, it remained an inside day. We never took out the low of Friday. We never took out the high of Friday. Now, we've already taken out yesterday's high. Yesterday's high was 54.93. Today's high, 54.48. Okay. But we've still not taken out the high of Friday. So we could have 2 inside days back to back. Now, it won't be an inside day of yesterday, the reason I just explained. But we've got to break Friday's high of 32.5 and Friday's low of 53.94 before we get before we get beyond this inside day situation. We did get our bearish cross that we were talking about yesterday. Price is now gently resting just above the 38% fib retracement. Okay. Yesterday's inside day took us back up to the lowest fib extension. Okay, there, that line. And the market, as it dropped, found support at the 38% fib retracement. When price drops to a fib retracement, we expect support and typically a bounce, especially if it's on the daily chart. Institutional traders, the ones who move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. The size they trade in moves price. We serve as liquidity. So whether you trade futures or stocks or crypto or Forex or ETFs, I encourage you to spend 2 minutes each day at the beginning of your trading session with the daily chart. Peek over the shoulder of the deep pockets who move price, see what they're up to. Our strategy and indicators are not designed to outsmart the institutions with their infinite resources, but they are designed to help you see and understand what the institutional traders are up to. And then once you have a firm grasp on that, all you got to do is do what they're doing long enough to get your goal for the day. Trading's not easy, but it can be that simple. So for today, we know we got resistance overhead at the lowest fib extension. We got support below at the 38% fib retracement. How we close today will be very important. Based on the fact that we got this bearish cross, I would anticipate us closing below that 38% fib retracement. We already caught a bounce off of it, so we'll see what the remainder of the session brings. All right, 30-minute chart. That's where all the alerts are created, both the concierge and the logic alerts. Nothing magical about 30 minutes. It's just a time frame I chose many years ago, and it's worked out pretty well, so it's not broke, don't fix it. Now, yesterday you were looking at last week's weekly trading zones, but today you're looking at this week's weekly trading zones. The reason being is all the alerts that go out on Sunday night are based on the previous week's zones. And that's what I was showing you yesterday with the alerts that went out Sunday night. Today I'm showing you the alerts that went out last night. So any alert published after Monday morning at 6:15 a.m. Eastern will always be based on the current weekly zones. We've published the zones since December 14th of 2009. This December will make 15 years. Once they come out Monday morning at 6:15 a.m. Eastern, they are carved in stone for the entire week. They don't change in any way whatsoever. Now, the zone down here is 54.39/40, and the low of this candle is 42.5. So on this pullback, the BBC held. The green lines called the BBC stands for bull bear cross. Price is above it. We're bullish and anticipate higher prices. And we're below it, we're bearish and anticipate lower prices. This is the CFMA1. I refer to it as red and falling, bearish, blue and climbing, bullish. The pullback to the BBC holds more often than it doesn't, like here, 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 and here. But we know eventually price will trade through. That keeps the markets fluid and tradable. Okay. So yesterday we found resistance at this zone, 39.40, and consolidated for a few hours. That is what happens 70% of the time. 20% of the time you'll get rejection, 10% of the time the slice. So as we rallied yesterday afternoon, we hit the weekly zone and it became good resistance. When price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Price always reverts to the mean. In our case, the mean is green. It's called the BBC, bull, bear, cross. Okay. So we opened last night right at the zone that we could not break through yesterday afternoon. That resistance sent us down to the BBC, which we expect to be support. Remember, pullback holds more often than not, and it held again here. But this time it had red and falling overhead, and that's downward pressure. So that took us slightly below BBC. And this low here is this low here from yesterday. Okay. So the market found support. And when it finds support, first it found support here, and then here. Support will send the market looking for resistance. Here on the 30-minute chart, we sliced through the zone like it wasn't even there. Now the zone's 5488/89. When we have a slice, typically price will, when it runs out of steam, when the move runs out of steam, it will retrace back to the zone it sliced through and continue in the direction of the slice. The fact that that did not happen here, that's a big clue that there's weakness in the market. So when the London markets closed at 11:30 a.m. Eastern today, we got this big red candle. Typically, the largest candle of the day is the Wall Street Open at 9:30. That's one of the smallest Wall Street Opens I've seen. It's actually a bearish engulfing candle right there. Move up. This candle is higher than the previous candle, lower than the previous candle, called a bearish engulfing. That is one of the most important candlestick signals for a potential reversal. And that's basically what we got. We came down to the BBC, we bounced up into the zone resistance. Remember, resistance, 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 and again resistance. And that sent us all the way down to the short target. Now, from this area of support, we spiked it a little bit. But from the short target, support, we're now bouncing back up. We're at potential resistance right now with the spike, with the daily step line. Just above that is the daily BBC. Then red and falling, and then the zone. 1, 2, 3, 4 areas of potential resistance. And if you want to add number 5, that high right there. Okay. So there's a huge cluster here that price would have to overcome in order to take out the high of the session. Although we've had a pretty strong bounce, about 50% of this move down when the London markets closed, the European markets closed. We spent a half hour treading water, and now we're trying to make our way back. Remember, price always reverts to the mean. And so with the BBC and the step line so close together, price gets up there, that's resistance times 2, possibly 3, maybe. Okay. All right, on the Dow. The vertical lines, remember, separate today, Tuesday, from Monday. Back over here, that's last week. So those really aren't important. But here's the 2 days so far this week. Here's where we opened last night with red and falling overhead resistance. That pushed us down to the BBC support, which bounced us up to red and falling, back to the BBC. Finally, we got below the BBC, found the zone and support, caught a bounce to right there. We spiked these highs right here from early in the session, back to the zone for support, and then we got this high right here is exactly the top of where the CFMA1 turned. Okay, that is a very important area. I haven't taught you much about it, but I will. So then price drops and it makes its way through. And then there's that attempt to retrace back to the zone when you have a slice. And then we continue down through the target, find support just above this low that bounces us up to the step line, and that sends us all the way down to the zone at 45.30/35. Okay, Michael is here, so when I come back, we'll pick up with the Russell. Michael's going to give us a recap of what happened in the live training room this morning and do some live trading on TradingView for 30 minutes. I'll then finish up the recap and close it up with our good word for the day.
All right. All right. Let me grab it and bring it over here. Here we go.
All right, looks good.
Okay. Right here. Now, good afternoon, everyone. Today is Tuesday, the 10th day of September 2024. Now, if you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com and click on the purple button right here. There is no credit card required for the trial. Okay, no credit card required for that trial. Click on the purple button. It's going to bring you to this registration page. On this page, all that we ask for is your name, your email, phone number, last name, email, all that. There's 5 multiple choice questions. Down here, if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Okay, that's all we need from you. If you give us that stuff, we'll be able to set up your indicators and get them indicating for you at the beginning of your trial. And that is ideally where you would want to be. Now, we had a lot of back and forth today. We did end up pretty much the high on everything that we did, except the NQ. We're up a little higher on the NQ at one point, but there was a lot of back and forth, particularly on the NQ. We were up, down, well, not up, down, but we had a full win, then a full stop out, then a full win, then a full stop out, then a full win, then a full stop out. And then we finally had a partial win, and then a full stop out, and then another full win, looks like, and then some, and another partial one. Anyway, we ended up with plus 60 on the NQ, plus 14 on the Russell, plus 31 on the YM, and plus 40 on the ES. That put us at $1,025 with one contract this morning. Today it took 5 minutes and one trade to get to the goal for the day. That power up $900 a contract, and it took a total of 26 trades this morning. So on the month, we're at $6,095. That's over 6 business days, averaging $1,015 per contract per morning session. On the year, we're now at $75,895 over 169 business days, averaging $449 per contract per business day. The 24/20 blueprint, we keep adding this number, and that's good. Days like today, where it doesn't take us long to get the goal, the number of minutes, that keeps adding it up. I mean, getting exactly the goal, getting on $100 a contract, that's good, but getting $100 a contract quickly is what's really important. Okay, if we can make our hourly average, if we got $900 in 5 minutes, then that is just about the equivalent of $7,200 in an hour is the way it measures out down here. So that's good. It's all good. Anyway, so if you were to start the 24/20 blueprint in January of this year and add 1 contract per month, you'd now be at 9 contracts, and you would be averaging $2,170 per hour. You would have had to work 51.5 hours so far this year. 51.5 hours so far this year. All right. If you did the 24/20 blueprint from beginning to end, I ended with an average of $7,419 per hour last month, or beginning of this month. Anyway, that was that. Let's get into the actual trades. We did have trades everywhere today. And so we didn't have too many on the ES. We had a couple of good ones, but not too many. On the YM, I'm liking these new arrows now that I figured them out. Now that you guys have figured them out for me and given them to me, this right here is where we got the goal for the day on this trade right here. Now I know it was in the zone. I thought it was going to be below the zone that it entered, but it was right in the zone that it entered, and I ended up getting 20 ticks on that. That was the goal for the day. Followed it up with a break-even trade here, and over here we stopped out, so we went to -5 on that one. We had +20, break-even, -25, and then here we picked up 21 ticks to get us. I'm sorry. Went from -5 to +21. So we went 31 ticks, I think, right there. 31 ticks. And then on the next one, we actually went up to 31. We got 5 ticks, got us up to 31. Then we had a break even, and then some sideways action, and we didn't trade again. During the break, all you're looking for here, guys, is for the ribbon to be spread. It doesn't have to touch the ribbon. It just has to be spread. You have to be coming off a higher or lower swing and be able to see all 4 lines in the ribbon. So right here, good. Right here, it didn't put in a lower swing, so you can't take that. Right here, good. Right here, that one's okay. I don't know if it went 10 ticks into profit. 488 down to 488 did not. So that probably would have stopped you out right there. We would have had a -25 on that one. Then change directions, and right here, let me see. It's coming out of the weekly trade. Yeah, you could take that right there. So you get it right back on that one right there. And it's got another one triggering right now. It just actually triggered on the YM. All right, what you're looking for is the ribbon to be spread, and you come out of the oversold. That's it. Simple as that. Come off a higher swing, spread ribbon, come out of the oversold. The trend is determined by the ribbon being spread. Okay, that's how you determine if you're in a trend or not. Right? If the ribbon's not spread, you're probably not in the trend. Okay. Let me get the question box up in case anybody did have any questions. I haven't seen any yet. I still don't see any yet. All right, so on the Russell now. The Russell, we were back and forth quite a bit. We had one trade that took forever. This one over here took forever. Now we started out on Russell right here, -26. Then we picked up 22 ticks, and we got to -4. Then I have that in there. I'm not sure if I mean to have that in there. But I know we went to -4, and somewhere we got something because we went to -4 to +6, so we had a +10. I think on here we had a +10, and then we stopped out here, and that put us down to -19. And then we had a +10 right there that got us to -9, and then we had a whatever that was right there. It goes from -9 to +14. I think 23 ticks right there. It got us to +14 on the Russell. So we're back and forth a bit on the Russell. There was a +10 in here that I didn't mark up. But we started out with a stop out, and then we got most of it back, and then we got the rest of it back, and then we stopped out again, and then we got most of it back, and then we got the rest of it back. During the break, it looks like there was just one trade right here that would have stopped out. Okay, and that was it for the Russell. Now the ES, I have all those target things on there. I think that was left from yesterday. The only trades we took on the ES, we took this one right here this morning for a +16, and then this one over here 48 plus 24, and that got us to 40 overall on the ES. Let me undo those things. There. Okay, we'll take those off. Those are the only trades that we did on the ES. It looks like there were probably a couple more trades in here, not during all this, maybe right there for a move up, and then right through here. If I spread this out, I got to spread it out quite a bit for us to see the whole ribbon in there. Okay. It's possible right through here you could have taken a trade, would have been a break even, then no more trading in that direction. Then it's possible again right through here you could have taken a trade. Yeah, right through here you could have taken a trade. Would have been profitable with no follow-up. Right through here, another trade, that would have stopped you out. Okay, and then looking for that higher swing. It got really choppy through here, so I wasn't really interested in anything over here. Once it broke out of the chop, there was a trade in there that would have been a break even, but once it broke out of the chop, there was a nice trade right here, went right up to the zone. It did put in a higher swing, so you could have taken this right here. I wouldn't have taken that going right into the zone. I wouldn't have taken anything else going on the upside there. Then we get into the break, and during the break, there was one trade here. We didn't really have much going on with the ribbon. We had this one right here. It was a beautiful trade. This one right here, another one. This one right here, another one. Now, any one of those would have gotten you the goal for the day. This one right here, another one. That did put in a lower swing, so you could have taken this. It would have gotten you that. This one over here. On the down close, you had all four lines in the ribbon were visible. Now, I know sometimes the lines turn blue, but being blue doesn't disqualify the trade. Okay, being blue does not disqualify the trade. That was a thing that I think somebody was messed up on this morning. I think she thought that the color change is what really made the difference, and it's not. Being able to see all four lines or not is what makes the difference. Okay, so right there. That one didn't put in a lower swing, so you couldn't do this one. That gave enough to get the stop to break even, but you would have missed that. This one right here would have stopped you out. Then it's it on that direction, and then you flip around, you start going the other way. This would have been just about a stop out to the tick, I think. I don't know for sure, but it looks like it might have stopped you out to the tick. You put in the higher swing, could have gotten it back on that one, and that one, and finally up over here. This was not a trade here because you didn't see all four lines in the ribbon. So that was the ES today. Okay, that YM trade, sorry, I totally forgot I put that on. Here it is, that YM trade that we were talking about earlier at the very beginning. This one right here. It just ran up quite a bit. You can see where I'm in at, and it ran all the way up here to 32 at one point. It was up there. I'm just going to lock in 10 ticks on that right now. Okay, that was the one right at the beginning. It should get up through 35 right here, and then up through the higher swing right there, the swing high, I mean. So it should get up all the way up to 43. Now the target is up here, but I'm going to put it right down here at 42. Okay, so we're going to get 10 or 30 on this. That's how it's going to work out. I'll put it right over here so we can watch it while I go through the NQ stuff. Okay, so speaking of the NQ stuff, let's do this alt and back. Okay, I went way too far. There we go. All right, let's bring this into view here. So here we go, our first trade on the NQ. I would get 20 or 30. No, 20 or 30 on that YM trade. Okay, I think it's going to give us all the 30. And you guys understand why I have that target right there at 30, right? You all get that right. Okay, so the NQ, we started out with a break-even trade right there. And then our next trade was right here. We picked up 48 ticks. All right, I'm going to get rid of that target now. We got 20 out of that. The next trade was right here. We picked up 48 ticks. Then right here, we stopped out. Let's get rid of one of those. Okay, we stopped out minus 36, so we're back down to 12. And then right here, we picked up 48. That got us to 60. Then we stopped out. That got us to 24. Then right here, we picked up 48. That got us to 72. And then we stopped out. That got us down to 36. Told you it was a cycle. Then finally we broke the cycle right here. We ended up with 4 ticks in profit. That got us to 40. And then we stopped out down to 4. We had a break even there. Then here we had a 36. That got us up to 52. No, we had a 48 that got us up to 52. Sorry, we had a 48 that got us up to 52. Then we had a +8 that got us up to 60. A break even in there, and that was it for the morning. Okay, that was it for the morning session. So if we go through what happened during the break, mind the weekly trading zone right here. Okay, mind the gap. You're on the tube in London. That's what they say. Mind the gap. Anyway, this up close right here was a nice trade. Went all the way up to the zone. This right here was a follow-up trade that went right into the weekly trading. So I think that happened right at the end of the session. I didn't do anything with it. You couldn't do this because this didn't put in a higher swing, but then this one did put in a higher swing. So you could do this, and that went just enough to get the stop to break even. All this junk right here would have all been one trade. Okay, all this right in here would have been all one trade, getting the stop to break even. You could have taken it again right here when it came out of the oversold right here. Would have been a nice trade there, probably 48 ticks. Could have done it again right here. Now these are 31 tick bars, so you know if you got the entry here at the right spot, let's say you got 76 and it ran up to 87 for 11 points, 44 ticks. You know, it depends. When it flipped down here, just start looking at the ones after it got through the zone. Okay, so like right here, not there, right here, that would have stopped me out. All right, it did put in a lower swing. You could have gotten it right back right there. So minus 36 there. Plus 48 there, plus 48 there, plus 48 there, plus 30 something on this one. And that put it in the lower swing. So you had another right here. That would have been really close to stopping out, but it looks like it would have given the whole 48. Then another 48 right there, again, really close to stopping out. This one, I think it went 4 points, 1675 down to 1175, went 5 points. So this would have been a break-even trade right through here. That would have been nothing. So I mean, I can go through every one, but you can see there was just a ton of opportunity. When you're using this simple trade setup like this, there's just opportunity after opportunity after opportunity. Keep in mind, you don't want to trade 1,000 times a day. You want to trade enough to get your goal for the day. You know, the spreadsheet. If you can't live off $2,170 an hour, then you're doing something wrong. But the idea is to just get in there, get the goal for the day. If you want to increase your goal for the day, that's up to you. You know, this is $100 a contract. You know, I know we have one guy, Matt. He is in here. It says Matt's in here. And I know his thing was going to be to just get one solid NQ trade a day. One good 48 tick NQ trade a day. And if you can get that, you know, that's, well, that's more than twice the goal for the day that I have, but it's a single trade most days. And if you can get it, wait for the easy and obvious trades, right? The easy and obvious trades. Wait until you know you have a trend. Wait until you see a target you're going to. Everything comes together. You don't have to take every single trade, right? I mean, you can couple it with all the other things that we've taught you over the years, but it doesn't get much easier than this. You know, if I were to just completely automate it, then that would be the next step to make it easier than this. And don't ask. It's a whole other process. All right. So that was all that stuff, guys. While I was talking, we had this trade here that I got those 20 ticks on the YM. When I started talking, got that 20 ticks right there. It looks like right now the ES is about to give another trade. It needs to get into the oversold. The NQ really didn't give anything while I was talking. They had this one flat spot right here. It had this trade here that looks like it would have stopped out. And it's pulling back now, so it might give you something to work with right now. But remember the weekly trading zones, right? So for anybody that's coming on, now, if you haven't taken a free trial with us, go to mytradingiq.com, sign up for the free trial right here. Just click on that. There's no credit card required for the trial. All right, when you do that, it's going to bring you to this registration page. On this page, all I ask is your first name, last name, email, phone number. Apply multiple choice. Down here at the bottom, you have NinjaTrader. If you have machine ID, put in your machine ID. If you have TradingView, give us your login ID. If you don't have TradingView, then go here to mytradingiq.com, click on trading platforms, and right here, select that or watch that video. All right, click on this. This thing right here is going to bring you to this page. Sign up for the trading platform, take the free trial. The trial is 30 days, right? When you do this, you're going to have to sign up for data, real-time data. And you can go back and look at historical charts. So you can watch the delayed data, but you won't be able to trade it. You'll be able to watch it with the indicators and see how things actually do come together. As they come together, it'll just be delayed. You won't be able to watch that in my charts at the same time. And you won't be able to trade it because the data will be delayed, right? You'll just be able to watch it. But come and take the free trial. Click on non-professional, click on monthly, and sign up for the free trial. It really is free. Yeah, do all that. Right? That's all you need to do to get started. Now, we did not make it into the oversold here. We did make it into the oversold here, but it wasn't trade. And we didn't make it into the oversold anywhere else. So the markets are just running right here. Running as we head into this debate tonight. I don't know. Might have to. I don't know. I can't watch this stuff. It just drives me nuts.
I talked about it earlier in the broadcast. The outcome of the debate tonight, or how the media perceives and projects the outcome of the debate. While it's a political debate, the economic ramifications on the United States as a country will stretch far beyond the next 4 years, no matter who wins the actual election in November. Because the two economic policies showing up at the debate are about as different as humanly possible. So
yeah, one is just giving it all away, and the other, I mean, I don't know. Where's all the money going to come from? What are they going to cut to be able to give? That's why I can't watch it. I'll read the stuff afterward.
Already, our school children are ranked like 80th in the world.
80th or that high?
It's a I don't know that it's 80, but we're way down the list.
I know it's way down from where it used to be.
Well, we used to be number one in everything. Now we're
back in the day. Now we're breeding generations of people with limited skills. I'll just say that. They don't know how to work with their hands.
Got airplanes falling out of the sky because of DEI hiring. I mean, come on. How much more clear does it have to be?
Yeah. I'm telling you, it's ugly. It's ugly. Anyway, we don't have any trades here right now. We're waiting. And the rectangle thing is as good as the other thing, Dwayne. I think the rectangle is actually even easier to move around. I think grabbing this that I did with my car.
Like that better.
Setting the space. It's easier for me to grab and move around. I don't really need to. It's too time consuming for me to do it. But if somebody's just trading one market and they don't want to have to do the math, then that is certainly a good thing to use. All right. So it is now 1:19. Wow, where did the time go already? Man. So we are oversold on the NQ, on the ES. So we have potential trades coming up right here. Now the problem with the NQ is the weekly trading zone is right there. It's got a low right now. The low of this bar is 63.25. So you'd be buying 71.25. That'd be just high enough. Just high enough above the zone there. So you'd be pulling out of the zone. That's not a bad place to take it. It'd be the equivalent of a bounce off the zone. On the ES, though, you're looking right here. The low is 81, so you'd be buying 83 on the ES. So this is what it looks like on the DOM for that one, and this is what it looks like on the DOM for that one. think I still have that in the right place. I do. I think it should be right here, one less. There it is. We triggered in. We had the up close. We triggered in. We came out. So this is a valid trade here on the NQ and the ES. The order is, no, I have a minus. I have a 36 tick stop on the NQ. All right, it looks like it's going to stop me out. It did. Okay, on the ES right now, we have a low here of 80 and a quarter. So it'd be 82 and a quarter is what you'd be buying. 82 and a quarter. So the NQ stopped me out. Oh, well. What I think is going to happen now on the NQ is it's going to come down. It's going to bounce off the ribbon and probably give it a long look. We can't take that because we stopped out right here. We had an actual trade trigger right here. And whenever we get a trade trigger, it has to continue the trend. Right now, the ES is pulling back pretty deep right here too. This is how the NQ's been today for me, though. I had been starting out with a profitable trade first, but but I was I was profitable. I still am profitable, but 78.50 up to 80.50 right now on the ES is what we're looking at. The ribbon is spread out. This is, I think, going to turn into a positive trade. Well, a positive move over here on the NQ. I mean, I know it stopped me out, but I think it's going to move up and give us a positive look over there. On the Russell, we're pulling back down and testing the ribbon right here. We've got a low of 81.3. 81.3. There's a chance that the ES is not going to be a trade. I'm going to cancel it for right now and wait and see what happens on the up close. All right. Now, if I would have left that on there, we would have just taken part in that gap up right there, but there's still not 4 lines shown in the ribbon, so it's not really a valid trade. Over here on the NQ. Now, something I want to point out is even though the lines change color, that doesn't mean that you don't see 4 of them anymore. You see how it changed to red? You can still see 4 lines. Here, it changed to red, and you can still see 4 lines. The lines in the ribbon all change to red when the BBC turns down. They turn to red, and they turn to blue when the BBC turns up. But that doesn't mean you can't see 4 of them anymore, right? There's a distinct difference in there between red being the same as the lines consolidating. It's the beginning of the consolidation of the lines. Because the BBC is the fastest out of all of the 4 lines, the BBC is going to be the first one to change. So when it turns to red, it's letting you know that it's starting to get congested and it's starting to change. But it hasn't changed necessarily. Okay. All right. So all that, say this. The YM's got a trade here. The Russell's got a trade here. The NQ trade didn't work out. It stopped us out, and it hasn't followed through. The ES didn't end up with a trade here. So we're just waiting to see what happens with the others. If you have not taken a free trial with us, go here. Run out of time. If you have not taken a free trial with us, go here to mytradingiq.com, and right here, click on the purple button, sign up for the trial right there. No credit card is required for the trial. What else did I want to show you? There was something else I wanted to show you. The results so far today, we're up 60 on the NQ. I know I just stopped out, but we were up 60 after the morning session on the NQ. We're up 14 on the Russell, 31 on the YM, and 40 on the ES. Okay, and that put us at $1,025 with 1 contract this morning. Today, it took 5 minutes and 1 trade to get to the goal. At that point, we're up $900. That was a YM short that I took to get the goal today. Okay. Now the YM and the Russell both have trades working right here, right now. Okay, here they are. I told you I'd put those on. I'll hit break even on both of them. That's break even. That's break even. Now, both of these are working out too. I was saying a minute ago that I think it's going to work out in the long run. I'm going to lock in 20 ticks on the YM and 15 ticks on the Russell. So I got 20 on the YM, and we're at plus 15 on the Russell right now. And we'll see where that goes. All right, it should get up through the Russell, not the ES. The Russell should get up through the prior swing high right here at 85.9. It should get up to right there. right? But we're at plus 15 right here. It's probably going to be that plus 15. It did give me the plus 15, but it should get up through 85.9. All right. Now, again, you're just looking for the ribbon to be spread and you come onto the oversold. You don't have to hit the ribbon. If you do happen to hit the ribbon and it hits the black line, that does not mean anything. All right, it does not disqualify anything. If you can see all 4 lines in a ribbon and you hit that black line, it's still a trade. Right? It's possible, not likely, but it's possible that you could have a bar that's like way down below the black line and still get a trade out of it. Right? It's not likely because usually it's going to get crunched up by then. But if you had a gap down and then a gap back up, it could happen. So the Russell needs to put in a higher swing. The YM just barely tapped the higher swing right there. The NQ needs to put in a higher swing, and the S needs to put in a higher swing. I mean, actually, this didn't give a trade. This one stopped us out, so this one definitely needs to give us a higher swing. But the S, not so much. All right. We are oversold here again on the YM. Now we just barely put in a higher swing there, so it's not looking like the best trade you're gonna have. Yes, I would really like to see a higher swing here on the ES too. Everything looks like it's getting tired right here, and we just have 3 minutes left. On the NQ, 3 minutes is an eternity. You could have 3 or 4 trades in 3 minutes. But these other markets, this one trade that I took on the Russell earlier, it seemed like it took forever. Which one was it? This one right here. I got in here at 10:51, and it did take forever. I didn't get out until 20 minutes later. 20 minutes later, I think I got out when it got up here. Actually, I got out with 10 ticks in profit. But over here, it was getting down really close to stopping me out. And I ended up getting in it on a pullback. I didn't get in it right there at the top of that. I got in on the pullback. But that was this morning. Right now, we have lower highs, lower highs, lower highs, and the YM's got pretty much an equal high right there. Okay. Oh yeah, I see that. Thanks, Val. Okay, so I set him up for the trial. All right, guys. Minute and a half. We don't have any trades right now. Let's go look at the other stuff really quick. Let's see. Bitcoin has an inside day right now. Mara, what was that doing the other day? What we're looking at, I think it was looking bullish the other day, wasn't it? The head and shoulder pattern, that's what it was. It was building head and shoulder, inverted head and shoulder pattern. So the shoulder is building right here. And the neckline will be up here at 15 and a half, looks like. What else did we look at? The ZB. So the ZB. Interesting. Had a little bit of movement today. A pretty good move right there. The ZB did from 2602 all the way up to 2629. That's quite a few ticks. 27 ticks, I think. At 31 bucks a tick. That's quite a move. Bonds, actually. All right, so everything is failing here and it's all starting to turn down. This is what I was thinking was going to happen. The YM could give us one more trade here as it turns down. It would be a weak trade right there on the YM, I would think. You know what I haven't done today really is I haven't looked at the larger time frames. But I'll have to do that another time. I have other stuff coming up this afternoon, and I'm going to have to wrap it up in here for now. It is now 13:30. So one more time, if you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. Do that. You'll be sent to this confirmation page. All you have to do is fill it out. Really easy. Down here at the bottom, gives you TradingView login ID or your machine ID for NinjaTrader. Either one or both of those. If you only have Ninja, go take out the trial. Go take the trial for TradingView. All right. This thing down here is only on TradingView. We don't have that on any other platform. All right. Go do that, and we'll get your indicators indicating for you. All right. All right, D. I can pass it back out to you in fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. If you are ready.
Recap of the morning session.
5 minutes, one trade, $900.
Good job.
Thank you. Thank you.
Okay, guys, we left off with Russell. Okay. Again, all alerts created on a 30-minute chart. Vertical line separates today, Tuesday, from Monday. Way back over here is Friday, so that's not really important. Yesterday, you were looking at last week's weekly trading zones because the alerts that go out on Sunday night are based on the previous week's zones. But today, as I said yesterday, today you are looking at this week's zones, which were published yesterday morning at 6:15 a.m. Eastern for all members and trial members. Once they're published, carved in stone the entire week. They don't change in any way whatsoever since December 14th of 2009. Closing in on 15 years. So we consolidated at the open right at a weekly zone. When price encounters a weekly zone, that's what's going to happen 70% of the time. Consolidation. 20% of the time rejection, 10% of the time the slice. As you can see, yesterday we didn't make it to either zone, but we did at the close. We ran up against resistance at the zone a number of times. Finally spiked above it, pulled right back to it in the BBC. Price always reverts to the mean. So we caught a leg, but we failed to take out the high from Friday, right there. So that's a sign of weakness. And as you can see, that sign of weakness has led us to where we are now. We opened right at the zone, but below the BBC. It's red and falling. Right there we got a bearish cross. And it took us right down. The target was 2092 and the low was 2092.9. So on that one we missed it by 9 ticks. Support will always send the market looking for resistance, which it found at the zone. Resistance will send the market looking for support, which it found at the target. Okay, and that target is based off that low right there from yesterday. It's called market structure. Support sends us back to resistance at the zone again. That resistance sends us down to the target, through the target. You got to look way left, find this support area that sent us back to the BBC. Remember, price always reverts to the mean. The pullback holds more often than it doesn't. So we hit resistance times 2 here, BBC and red and falling. So that pushed us down to a new low on the day. Still not all the way to the zone. Zones are pretty wide this week. So you look left, you'll find the reason. Support. Now sending, we've overcome the step line. We're overcoming red and falling. When we hit the BBC, expect that to be good resistance until proven otherwise. That resistance should give us another leg to the downside. And if we can take out current low of the session, then on down to the weekly trading zone at 2069/2070 on the NQ. Here's where we opened last night, and we dropped the BBC. The pullback held, but it bounced us right into resistance at red and falling. So that took us below the BBC. This low right here from yesterday, pretty much these lows all across here. We got one little spike down that took us to this low. First it was this low, and it was this low. That low support sent the market looking for resistance. So on the way up, once we got above the BBC, you can see the perfect stack: price, step line, balloon climbing, BBC, just right up to the weekly zone, where we spiked up enough to hit the long target. We consolidated for hours. We went from the zone back to the BBC, back to the zone. This time we traded through the BBC, and this low came in just above this low. That's a sign of buyer interest, and it pushed us all the way back up to the zone, where we're still finding resistance. We had hours of resistance there, and now we're in our second 30-minute candle of resistance there. Now the zone overhead is up at 19,178. And of course you can see this zone here, and then the next zone down. So we've not made it to the zone where we found support yesterday. A leg and a retracement, a leg, retracement, and a leg that failed to put in a higher high. Which brought us down to these various levels of support that I pointed out. On crude, here's where we open. Market tried to get to that long target, but we already talked about crude today and why crude is down so much on the day. The high of the session was $69.08. We'll just call it $69. From 69 to 66. That's $3,000 per contract traded. That high to right there. The price of crude moves $1, that's worth $1,000 per contract traded. Gold moves $1, $100 per contract traded. Silver moves $1, $5,000 per contract traded. So crude made the mighty drop. It seems to have found support here at the weekly zone. The step line, okay, see how on the way down it's just perfectly straight. But now that the market has found support and started to consolidate, which is what happens 70% of the time at the zone, the step line is about to cross red and falling. If the step line manages to fully cross red and falling, then anticipate a bounce. And currently the BBC is at the zone above. However, as price attempts to retrace to the BBC, You've got this area here for potential resistance. You've got this area here, potential resistance. Price can overcome all of those, then it will in fact make it to the BBC. Now the longer we consolidate sideways, BBC will drop. Okay, the BBC dropping to meet price is a very different dynamic than price rushing up to meet the BBC. Gold, here's where we open, dropped, BBC, we had red and falling, that actually took us below the BBC. We found support at the weekly trading zone, 2530/31. Price drops to a zone, we expect support until proven otherwise. So we get a bounce and a retracement, and a bounce and a retracement. Here the pullback to the BBC held, and that sent us almost up to the long target. We missed it by 44.3. Yeah, missed it by 7 ticks on that move. Okay. And so down we drop through the BBC all the way to the zone where the market found support. Remember, once the zones are published Monday morning at 6:15 a.m. Eastern, they don't change. So from support, market goes looking for resistance. Traded up to the target and through it, but it failed to take out this high. Now, it did take out this high, but it failed to take out this high. That dropped us back to blue and climbing, and now we kind of have a mess here. It looks like it wants to roll over. Okay, that wick sticking up there, that's pretty bearish. So we'll see. If price comes back to the BBC and doesn't get a bounce, then you got a nice window of opportunity down here from 25.34 to the zone at 31. Zone's 25.30.31, so that would be $300 per contract traded. That's if the pullback to the BBC doesn't hold. Okay. Right there. Now, let's say price finds some buyers and it continues to push us higher. Okay. Got to be wary of this high right here at 2584.4. So you'd want your entry to be 25.49. So from 49 to 51, $200 per contract traded. So there's opportunity in either direction. You just got to be patient and wait for price to get there. Silver, here's where we open. Blue and climbing is directly above price, so that acts as resistance because it's probably, once blue and climbing gets directly above price, that's a signal it's probably on its way to becoming red and falling, which is bearish. So we came down to the BBC, pullback held, bounced into red and falling, even spiked it a little bit, came right back to the BBC, consolidated here for hours. Now this zone is 2854/55. The low was 56, so we missed it by a penny. It only takes 2 pennies in silver to get your goal for the day. So we close back above the BBC, and this candle opens at 29, we'll call it 66, 29.66 up to 76. So that's a dime. That's $500 per contract traded from the open to the high of that candle. Now, we ran into resistance here. That sent us back down to the step line. Gave us a bounce, and then a pull back to blue and climbing. That gave us a bounce. Okay. Resistance sends us to support at the BBC. And we didn't quite make it to the long target. We hit the short target on this move down, got below the BBC, ran right through the zone, hit the target pretty much to the tick. Bounced us up to the BBC, resistance, down to the zone support, back to the BBC resistance. So price is pinched. It's decision time for silver. Is it going to get above the BBC? If so, then a trade of 28.72 to 75. That would be 3 pennies. You only need 2 pennies to get your goal for the day. And again, you got this window of opportunity up here, 28.81 to 86. It's 5 pennies. It's $250 per contract traded. And if we were to get through the target, then you got to go back and look all the way to Friday to see where your resistance is. Okay, there's 2 areas. Okay. All right, and that's where we stand on silver. This low that we put in on Friday at 28 bucks. We didn't quite make it to 29, but if we'd have gotten just a little bit higher, from 28 to 29, that's $5,000 per contract traded. Euro, here's where we open below the BBC, along with red and falling. We got a leg down, found support. And that bounced us up with blue and climbing to the BBC. We spiked the BBC, but we didn't make it all the way to the zone, nor did we take out these highs from yesterday. And we immediately rolled over at the London Open. This run-up was in anticipation of the London Open. London Opens, remember this is the euro. And it dropped like a rock. Consolidated along the BBC for quite a few hours. And then we got a leg and a retracement and a leg. Took us all the way to the target and to the zone. That's where the market found support. Support and the market looking for resistance. Now, if this candle makes it up to the BBC or the next candle, keep in mind you've got red and falling has already turned to blue and climbing. Okay. So when price approaches the BBC, if it's supported by blue and climbing, then there is a greater probability that it will be one of those instances where the pullback doesn't hold, but actually trades through. You can see it held here, and this candle opened and closed above the BBC, but it was a red candle, and it just took you right back below the BBC, up into resistance ×3. Red and falling, BBC, and the step line. Leg and a retracement. And a leg. That brings us all the way around the world back to the daily chart. So when we began broadcast today, market had found support at the 38% fib retracement. It has now bounced back up to the step line. If we can overcome the high of the session, then we're going to run right into red and falling, and then right into the BBC. Both potential areas of resistance. And the high, 55.32. Red and falling is at 55.21.75. So from here, got a lot of resistance overhead, but it would be a pretty simple trip to get back to the support we found earlier at the 38% fib retracement. Remember, anytime price hits a fib on the daily chart, it's almost always good for a bounce, and we've certainly seen a very nice bounce off of this. Question is, be enough to get us below this lowest fib extension, or will we end up the session back down at the 38 or below? Now we've got a low, a higher low, and at the moment a much higher low. Okay, so again, how we close today will be very important. The debate tonight, again, I encourage you for 2 hours, put the mouse down. Okay, now the debate's going to happen, but that's probably only 25% of the equation. Once the debate's over, then every media outlet is going to have their own spin, right? Okay, and we know who the media favors right now, because, well, they're in their pocket. So then, how do the American people evaluate what they saw? See, it's a sad thing, because you're going to have all these people, you're going to watch it, you're going to hear it, but then you're going to have all these people come and tell you what you actually saw and what you actually heard. And you'll be scratching your head going, well, no. So, I mean, the truth can be twisted 9 ways to Sunday. So can a lie. So it is what it is. The debate's over. Pundits go to work, all giving their spin on what happened. Then you've got the London Open, which is probably going to be very active because of the debate. And then finally tomorrow morning, when Wall Street opens at 9:30 a.m. Eastern, you're going to get hit with more volatility based off the debate. Because Americans won't be able to trade stocks tonight. Well, if you're an American in another country, you can. But if you're here in the U.S., the stock market, as you know, closes at 4 p.m. Eastern. So you're going to have 4 jolts of volatility during the debate, immediately after the debate, London Open, and the Wall Street Open. And just be careful. Just be careful. All right. Yesterday, our good word for the day was about having a vision for your life. So today, change your thinking, change your life. Part 1. I got a book the other day from Audible. It was an odd choice, but I had my reasons. The name of the book is How to Un-F Yourself. Now, on the title of the book, it doesn't say the word. It's got, the little symbols that you can fill in the blanks, obviously. But the author had an interesting twist on some things that I really wanted to, and I had credits. And if you don't use those credits in Audible, they expire. So I got to cancel that thing too, because I don't want to be buying books just because I don't want my credits to expire. That's crazy. And a lot of times you can buy the book for cheaper than what your credit is worth. I think their monthly rate now is $14.95 a month. That gives you 1 credit. Who wants to spend their 1 monthly credit on a book that costs $8 or $10? Of course, these are all audio books, but it doesn't change the fact that who wants to do that? I think always got a conspiracy theory. I think they dangle some of these titles that are very intriguing at a price point just below the value of your credit. So, what do? You go ahead and buy the book that's worth less than your credit value, and then you go find a book that is worth at least your credit value. So, anyway, first audiobook I downloaded from Audible, other than Trading in the Zone, I guess, was the official biography of Steve Jobs, the one he commissioned before he passed. He wanted the truth to be told. He didn't want anyone to paint any pretty pictures about what a nice guy he was, because he was not a nice guy. He was mean, he was evil, he was despicable, and he made no bones about it. He didn't bathe, he showed up barefoot. I mean, the guy you saw on stage with the black turtleneck, if that's the only vision you have of Steve Jobs, you really, really should read the official biography. The narrator does a great job. The writer does a great job. I think the writer is the narrator, if I'm not mistaken. And it will take you 24 hours to listen to the entire book. Yeah. So, if you're a member of Audible, you got a credit to spend. That's a good place to spend it. It'll keep you busy for a while. All right, let's go. Change your thinking, change your life. Part 1. Romans 12:2. And be not conformed to this world, but be transformed by the renewing of your mind. When you think creatively, you're thinking like God, your creator. But not everybody will welcome your creative ideas. Jesus wasn't crucified because he worked miracles. He was loved and applauded for those. He was crucified for having ideas that challenge the status quo. God is the giver of great concepts, truths, and ideas. So when he gives you one, don't let anybody talk you out of it. Don't let the fear of rejection or failure kill your idea either. After all, you can't do something new and exciting if you force yourself to stay in the same old rut. Don't just work harder at the same old thing. Make a change. And the first thing you'll have to change is how you think, what you listen to, and what you believe. Take a look or a listen at the following phrases. I'm not a creative person. Follow the rules. Don't ask questions. Don't be different. Color inside the lines. There's only one way to do it. Don't be foolish. Think of your image. That's not logical. It's not practical. It's never been done. It can't be done. It didn't work for them. We tried that before. It's too much work. We can't afford to make a mistake. It'll be too hard to administer. We don't have the time. We don't have the money. Yes, but all right. Be not conformed to this world, but be transformed by the renewing of your mind, that you may prove what is good and acceptable and the perfect will of God. Romans 12:2. The word for today is change your thinking, change your life. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.